Hi there, welcome back. Nice to be here with you for the trade on this Friday afternoon. Well, President Trump and Chinese President Xi Jinping will meet next Thursday on the sidelines of the Asia-Pacific Economic Cooperation Summit. The meeting in South Korea will be the first face-to-face since President Trump took office in January and comes ahead of the tariff deadline he imposed on China early next month. Meanwhile, the U.S. has announced sanctions on Russia's biggest oil producers, with the Treasury Department blacklisting state-run oil giants Rosneft and Lukoil because of what it says is Russia's lack of serious commitment to a peace process to end the war in Ukraine. The new sanctions were unveiled after plans for a summit between the U.S. president and Russian President Vladimir Putin was scrapped, with the American leader saying, "It didn't feel right to me." And the European Union has adopted a new package of sanctions, which also targets Russia's energy infrastructure. U.S. Treasury yields have risen, boosted by the surge in crude oil prices. The U.S. two-year yield rose 3.48% to 3.48%, while the 10-year was up to 4%. The U.S. dollar index is up 0.1% on the day. The Aussie dollar is at 65.1. Let's get across the charts now. Zoran Kresovic joins me from Blueberry Market. Zoran, welcome. Thanks so much for joining us. So, a few wobbles coming through in equities. In fact, the fear and greed index still pointing toward investors being fearful. What are the charts telling us about these U.S. indices?
Yeah, fear and index is actually a little bit wobbly, but nevertheless, VIX is actually coming off, which could be perceived as a positive, Nadine, especially in an environment where we're actually going into seasonally adjusted, really good period, especially from around October till around December, what we like to call leading into the Santa rally. But I'm just having a look at the chart here of S&P 500, and whilst obviously we are in the midst of Q3 reporting season on the equities in US and also locally here, what we can see is that S&P 500 has actually revised and regained some of the losses from yesterday. We've seen some of the big tech 7 stocks actually report, and we've seen that Tesla has actually lost some ground earlier in the week. But for some reason, it's obviously provided a good opportunity for some of those big funds and then perhaps retail money, and it's actually regained some of those losses overnight of approximately 2%. And with that in mind, then obviously another stock, IBM as well, reversing as well. That's actually provided a bit of bullish sentiment to S&P 500. So since the October the 10th, when the market actually dropped quite heavily and lost approximately 3.1%, we've actually regained all that now. We're hitting at 6,750. I would like to think this is a major resistance level, or at least for the short interim. But we are likely to probably head higher into the year end and eye that 7,000 level, which is obviously being nicely supported by the uptrend dashed line in blue.
In blue, all right. Let's take a look at another main market that's been making headlines this week, and in a positive way for a change, crude oil. Now, this is very headline driven. We just detailed all of the conjecture around Russia and its supplies and sanctions. So if you look at what's happening technically, does this rally have legs?
I certainly think it does, Nadine. And in fact, actually, it's probably one of my favorite charts of everything that I'm actually seeing right now. And I do scan through them on a daily basis. In fact, if you're a technical trader, this is probably a gold mine for you. I would like to think so, at least in the short interim. So having a look at the chart itself, we can actually see that RSI is actually starting to climb up. It's broken a downtrend line on RSI from back around June the 23rd, which is coinciding with that $77.59, which was June 23rd peak. Now, that blue dashed line in downtrend is also a downtrend that's been actually unfolding and happening for quite some time, with creating lower peaks and lower troughs. What we're seeing over the past few days, or in fact for the past week, we're actually seeing a major reversal in crude oil, and what we like to call a triple bottom, or at least on the short interim, which is a good reversal pattern that many traders or technicals would like to actually see. So for the past week, or at least looking at the last major range on this chart, we can actually see that the stock bottomed around $56, which was a major support level. So that was end of last week, and then we are seeing crude oil actually climb back up and regaining some of the lost ground for the past week of around 8.5%. with the move last night of 2.8% to the upside, we can actually see that it's challenging the major resistance level of around $60-$61. And that's, as you discussed and mentioned previously, purely driven on the supply demand basis, because US has implied additional sanctions on Russia, or in fact on the major two oil exports, including Lukoil, which is cutting around 5 million barrels per day in terms of the overall global oil supply. So on the back of that, obviously, it's only natural to think that crude oil is going to continue heading higher, and it's likely to test that, as I mentioned previously, $60 to $61. If we break through that major downtrend line in blue dashed line, which is around $60, $62, then we are probably likely to see crude oil head higher to around $65 to $67. US is also canceled the meeting with Russian President Vladimir Putin a couple of days ago. We can see that he's also retaliating, putting a lot of pressure on China and India, because they have been the major global buyers of Russian crude oil. And if there is some effect taking in that, and we see major demand coming into the market with a shortage of supply, then we're probably likely to see crude oil heading higher towards the $65 to $70.
Wow. Okay. So we will continue to watch that with much interest. Now, everyone's asking, how low can gold go? What do you say?
Yeah, I believe I was speaking to one of you, to your colleague Julia, and that was actually a couple of weeks ago, and I did mention on the show that I would like to see a bit of a retracement and pullback in dovish stance and profit taking on gold, and I feel that's exactly what's actually unfolded, as we've seen earlier in the week, with gold dropping to one of the biggest downside rallies since around 2013. In fact, actually, gold has lost approximately 8.5% of its value. But when looking at the overall scheme of things and how much gold has appreciated since start of 2025, which is approximately 56%, and then additional 24% for the year 2024, it is probably only natural to expect that gold will actually somewhat retrace and consolidate. 4,000 is a big round psychological number. We have touched on a couple of days ago, and we can actually see some buyers coming into the market now. What I've got on the chart here is a dashed blue uptrend line, which is hugging the trend and actually still intact. It hasn't broken below it. And we are sitting around 38.2% Fibonacci level of the last major upside range from around end of August till up until the most recent high, 4383. So we are consolidating there with the natural level of support. We might gain a little bit more ground because the CPI data coming out tonight in the US, which is one of the very few data points that are coming out during the shutdown of the US government. And we will be reluctantly looking into that and paying a particular attention, because whilst market is anticipating on monthly and yearly data set actually for the CPI to come in line with the market consensus or expectation, we still want to see for any further surprises. If the CPI continues to head higher, whilst we might get the interest rate cut on the 29th of October, we might actually perceive and revise them moving into the December meeting. On the back of that, we might see gold accelerate a little bit higher up.
All right, Zoran, thank you so much for joining us. Really appreciate your time.
Thank you so much for having me, as always.
Take care. That does it for this episode of The Trade. We'll be back next week.